Having already talked about the history of fine wine and how the market works, today we're going to look at the current outlook of the market. You're probably well aware that inflation has just reached its highest point since April 2012, currently at 2.9%. What this means to you is if your investments are performing below this rate, then your portfolio is depreciating. In a recent article from a wine source called Drinks Business, researchers showed that the pound has depreciated by 15% and is today worth 85 pence in comparison to 5 years ago. Now if you compare that to the growth of the fine wine market, the pound would be worth £1.60 today, which is a gain of 60% across the past 5 years. So knowing this and knowing that inflation has peaked again, what could possibly the pound be worth in another 5 years? If we was to look at the last 4 financial crises we've endured, being Black Monday 1987, the sterling crash in 1992, in the millennium the dot-com crash, and most recently the collapse from Lehman Brothers in 2008, you can clearly see a pattern where these downturns are happening every kind of 8 to 10 years. This means potentially we're a stone's throw away from the next one. This is a big reason why more money today is being moved out of financial markets than coming in. One such market that has proven a very popular alternative is the fine wine market. Today, Livex estimates that the fine wine market is worth around £2.3 billion annually, a figure that has trebled since 2004 as a result of the market expansion in areas such as China, Japan, Russia and the US. The Livex membership, which includes merchants in 22 different countries, such as ourselves, accounts for about 75% of the total market turnover. Despite the auction market often dominating headlines, it only accounts for about 10% of the marketplace, and this is largely down to the auction-centric US market. Globally, it is still the merchants that dominate. And a lot of UK merchants have Brexit to thank for the fall in sterling, which has meant an increase in the appeal of fine wine to investors. This is particularly the case in Hong Kong, where the currency is dollar-linked, meaning that many top wines in the UK are priced in sterling, making them cheaper since the currency's fall. You only have to take a quick glance at a Livex graph to see the positive effect that Brexit has had on the fine wine market. Last year, the market grew by as much as 22.3%, with some wines in particular showing phenomenal growth. Take the Angelus for example, the 2008 vintage, appreciated by 23.4%. The famous Dom Perignon 2005 gained 31.4%. Chateau Pontet Canet, the 2009 vintage, was an increase of 20.8%. And finally Napa Valley's Dominus 2010 appreciated by 17.7%. So as you can imagine, it's a very exciting time to get involved with the fine wine market, and more investors across the globe are starting to give it the respect it truly deserves. With increasing demand in countries such as Japan, China, Russia and the US, the market is showing no signs of slowing down. Merchants such as ourselves are feeling very optimistic about the future of fine wine. So, thanks everybody for listening. I hope it's been educational. If you'd like to find out more about fine wine, then as a company we host regular wine events across the country. Please hit the link below, register your details and we'll be in touch to let you know if we're in an area near you.